Good afternoon, everybody. Good morning or good evening, wherever you are. This is Live Market Open for Thursday, April 13th, not at our usual hour, at the beginning of the US session. I'm, as always, Yohay Elam of Forex Crunch and Market Movers podcast, doing the show, as usual, for FX to read. As always, we'll talk about recent developments in markets, cover charts and levels, discuss the upcoming events. Our currency of the week is Euro-Dollar, the world's most popular currency pair. We'll discuss the week ahead after Easter and then wrap up the show. So good morning, Ramon. Good morning, everybody else who is watching. And of course, the most important part is your questions. You're welcome to ask questions at tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? Good morning, Mauricio. We had the Trump tumble, as I call it. We had President Trump talking down the US dollar. We'll discuss that in a bit more detail later. We had the strike in Syria, the atrocious chemical weapon attack in Syria by the Assad regime, and the response by the US military, which fired tomahawks, and that caused some tension, some inflows into the yen. We also have tension between North Korea and the United States, South Korea, Russia, and Japan. Another theme in the markets was that the Fed minutes last week, it seems like a long time ago, they were leaning a bit more, I would say, to the hawkish side, talking about changing the reinvestment policy. In the Eurozone, Draghi went a bit dovish, talking, saying that there is no change upcoming in the horizon. This weighed a bit on the euro. We had the non-farm payrolls. We'll talk about those details soon. And then we had... the dollar eventually emerged as a winner, also on safe haven flows. And now, as tomorrow is in some countries already today, people are on holiday. So we're having the long Easter weekend. That means thinner trading. Tomorrow is the quietest day in this holiday. Monday, most markets are still closed, but a bit more open than on Friday. And then from Tuesday onwards, it's back to business. And last but not least, on the global things that shape the mood, oil prices are gaining some ground. Okay, let's talk a bit about what Trump said. It was yesterday in an interview to the Wall Street Journal, not in his usual tweet storm, although his tweets also caused disruption as usual about North Korea, about Syria, things like that. So basically, the President of the United States now said that the dollar is too strong. It's not the first time he said that, but this time it had an impact because the dollar was strengthening. And, not against the Japanese yen, but against other currencies, especially against the euro. We'll see that kind of upwards channel bounced from the lows. Anyway, he said the dollar is too strong. Another thing that he said, that China is not a currency manipulator. So he doesn't see China as manipulating the currency, at least not now. But he said, but basically everybody must be manipulating the currency if the dollar is too strong, okay? So that's a break of his election promise to label China as a currency manipulator. The full report comes from the Treasury, not from the president, but that's probably what's going to happen. Another thing that really hurt the US dollar, not only talking about the dollar, but saying that he likes low interest rates. He wants interest rates to stay down. Now, in theory, again, the Federal Reserve is independent, and it mostly is. But, of course, the president has an influence on the Federal Reserve. He has an influence. He nominates people to sit on the board of governors, and there are 2 vacant seats there, and he determines who's the chair. Of course, the Senate has to confirm, but he talked about dismissing Yellen when she ends her term in February 2018. Now, in this interview yesterday, he said that all options are on the table regarding Yellen. It's too early to tell, so maybe he'll nominate 2 dovish members, and maybe he'll keep Yellen, which is generally a dove. So, all in all, these are big flip-flops about Yellen and about China. But for markets, the important thing is he likes low interest rates, and the dollar is too strong, and the dollar fell. Okay, let's go back to this is the main thing that is happening in markets around the foreign exchange. It had a positive impact on volatility, which was a bit sleepy, I must say, and we're seeing some kind of a correction, but in general, we had a spark in volatility just before Easter. None from payrolls. So initially the US dollar fell. Why? Because only 98,000 jobs were gained, much, much lower off the charts, where expectations stood on around 180,000. But wages were still healthy, 0.2% month over month, 2.7 year over year. This helped the dollar. Unemployment, the general unemployment rate, the U3, is down to 4.5%. Good news as well, without a drop in the participation rate, which remained at 63. The real unemployment rate, including discouraged people and those wanting a full-time job but are forced to settle for a part-time job, is also down to 8.9%. And only the average work week was a bit ugly with 34.3. But the dollar fell, but eventually won. I think wages are responsible mostly for the win. Okay. Anyway, that was already on Friday. We're already on Thursday. But we had other figures at that time which were mostly positive for the United States. US jobless claims after a few worrying weeks are back to normal. And the ADP was strong, even though this time it wasn't correlated. Okay, manufacturing was a bit weak, but still showing strong growth. Elsewhere in the world, we had UK services PMI looking good. Trade, but again, a bit mixed. Trade balance balloons to 12.5 billion. So that's weight on the pound. CPI, inflation in the UK now matches the level of wages. Wages are 2.3. CPI also 2.3. So wages are rising at the same pace as inflation. That means real wages are flat zero. So UK standards of living are not doing so well. Okay, but we had good jobs reports in commodity currency countries. We had the Canadian employment beating expectations. Once again, it's a winning streak in Canada, 19.4 thousand. Bank of Canada's decision was also relatively optimistic, and those helped the Canadian dollar. In Australia, the employment change jumped by 60,000, and the employment rate remained at 5.9, but the participation rate was on the rise. So it's good news from Australia as well. So both currencies had reasons of their own to celebrate against the US dollar. Okay, now we talked enough about what moves currencies. Let's see the actual moves on the charts. So this is the technical segment for major currency pairs, the Easter edition. Right. So we're starting with the world's most popular currency pair. This is a chart I want to show you, this upwards channel, okay, uptrending channel. The low, we have three higher lows. The first low is just at the beginning of the year, 103.40. Then it was followed in early mid-March with 104.90 there, and we had another low now. We had a bounce, okay? On the top side, it's a bit more complicated, but again, we have higher highs there, 108.30 and 109.05 currently. Well, today we're seeing euro dollar sliding a bit, but after that big jump yesterday, hopefully volatility is back. Resistance at 106.60, 107.20, 107.75, and 108.30. Support 105.60, 105.20, and 104.90. Okay, let's move to pound dollar. Here we are very much range bound, but also here the pound enjoyed the downing of the dollar by the Donald. All right, so we have currently cable trading at 125.35, resistance 125.60, followed by 126.15, and then around the round number of 127, below 124.15 and 123.50, followed by 122.50. All in all, you can see that the pound again is range bound. Dollar yen, here we have quite a big breakdown. The dollar yen is trading at the lowest levels since since last year, actually, since November or December. We had a big downfall. The line, the round number of 110, held up very, very strongly. We can see here the triple bottom at 110. Eventually, we had a breakdown. The next level of support is only at 108.65, which was the recent low just last night. All right, below that, it's 107.50 because that was a line of resistance deep into 2016, and then 105.50. To the upside, we have, of course, 110, very clear line of resistance, then 111.60, which was also a triple bottom until it was broken, and 112.20. Right, so dollar yen has clear lines of support and resistance. Dollar CAD, again, the Canadian dollar enjoys good news, and the US dollar is falling. 132.32 is a level at the moment. 132.80, 130.80, and 130 are lines of support. Resistance here at 132.65, a swing low seen in mid-March, followed by 133.80, 134.60, and 135.40. Aussie dollar dipped out of its range, also fell to the lowest levels since the beginning of the year, 3-month low for the Aussie, but it had stubborn support here, stubborn support at 74.70, and it bounced back, moved all the way, got very close to 76. Support is at 76. Sorry, resistance 76.10, followed by 77. Support, some support at 75.40, stronger support at the round number of 75, and the strongest support at 74.70. Kiwi dollar did enjoy the Trump tumble, but not as much as other currencies. Still a bit stuck, still hugging the 70 level. Remains a pivotal line in the range. So 69.50 is some kind of support, much stronger support there at 68.80, and then 68.60 resistance, 70.40 and 70.90. Okay, and dollar Swiss, our last currency in this roundup of major pairs. So currently at above parity at 100.53, resistance 101, followed by 101.70. Below parity, we have support at 99.60 and 98.90, and lower support at 98.20. Okay. So this concludes our major pairs for our Easter edition. And now to the crosses, lines of support and resistance for crosses just before Easter, April 13th. So we'll start from Euro Swiss. The currency pair, the currency cross that is well guarded by the Swiss National Bank, which wants a weaker Swiss franc. So here we are at 106.84, support at 106.65, followed by 106.25, resistance 107.50, and then 107.80 and 108.25. Very limited range here. A more interesting pair is, as usual, Euro Pound, now dipping to the downside, 84.75. Some weakness in the euro. So further support at 84 and then 83.30 and 82.67. Resistance 85.73 and 86.60. Negotiations are set to begin officially in June about Brexit. Euro yen, quite a big downfall from here. This reflects the strength of the Japanese yen, just under 116 at the moment. Support 114.50 and 113.80. Resistance 117.40 and 118.15. And one of the most popular currency pairs, at least crosses for traders, has become a bit boring, unfortunately. The pound yen, the Gepi or the Dragon, is grinding to a halt, more or less. 136.40. Further support 135, 132.50 and 129. To the upside, we have 138.50, 140.50, and I would say 144.80. We had bigger moves back in, well, November and December. Now we're stuck. And we'll conclude our crosses adding our, as usual, this number one commodity, oil. WTI crude oil made quite a move to the upside. Again, we have this recurring pattern of a triple bottom here at 47. So from 47, we had a rise to above 49.50, which works as support, and above 52, all the way just above 53.30 at the moment. 54.50 and 55.20 remain lines of resistance. So we're back to the upper range. It's mostly talk about extending the OPEC deal. I have my doubts, but we'll talk about oil in depth in another opportunity. Okay, so that concludes our crosses for Easter. Now let's discuss our upcoming events this week. We don't have too many. We have, in just 15 minutes time, we have US producer price index. It's a warm-up for the CPI, and shouldn't be that of a big deal. US jobless claims, we'll have to see that indeed we're back to lower ground. That means the US continues in its positive trend for jobs. And then consumer sentiment. This could be the biggest event for today because it's the last event before Easter. It's the University of Michigan's consumer sentiment. So that's the biggest event for today. Tomorrow, Good Friday, Easter Day, markets are basically closed, but most brokers still able to trade. It's not Christmas, it's not New Year's, and we have top-tier US figures, inflation and retail sales. Okay, retail sales have been mixed of late. Inflation has been going up steadily, but the Fed is always cautious about that. Retail sales is the vast majority of the US economy. I would say if you're not on holiday, trade with a lot of care. It could be a very boring day, range bound, nothing happening whatsoever. Okay, it happens many times on these thin liquidity days, but thin liquidity and high risk events can cause exaggerated moves, disrespecting lines of support and resistance. So watch out there. If they both go in the same direction, if they're both positive, it will send the US dollar jumping. If they're both negative, it'll send the US dollar falling. And of course, the lack of liquidity, the low volume can trigger big moves. So be careful out there. But as always, we also have news coming out. North Korea is getting ready for a nuclear test, according to some reports. The Syria situation is causing tension between Russia and the United States, and well, so many other conflicts going on. So if something happens on Easter, it'll be significant. All right, and now for a currency of the week, euro dollar, the world's most popular currency pair. Let's begin with a look at the charts. We had here a triple bottom, recurring feature at 106.30. All right, and it fell off and reached a new low of around 105.60. From here we had a bounce. And we have higher lows. Again, first low 103.40, the 14-year low at the beginning of the year, then 104.90, then now 105.60. You can see here a channel, and on the top side it's a bit less clear, but we also have a move there to the upside, higher highs. Okay, so euro dollar is going, let's say, 5 steps forward, 4 steps backwards. So it's a bit of a mixed bag, but I think well, it might be frustrating at times trading the euro dollar. I think we do have the beginning of a trend. If this technical analysis is correct, we're currently at the bottom of the range, and that means we have room to the upside. Okay, but let's begin with the slide of euro dollar. We had Draghi's dovishness. We had the president of the European Central Bank taking the hot air, I would say, out of his hawkish colleagues. So I'll mention a few of his colleagues talked about raising interest rates, at least the deposit rate, before ending quantitative easing, not extending QE beyond 2017, and in general expressing optimism. And then came the person that has the biggest impact, the president, Mario Draghi, the Italian. He said, we didn't mean to say anything in that decision. Again, reclarifying that they're not going to change stance, just not afraid of the extreme scenarios. And lots of monetary stimulus is still very much needed. Okay, so that sort of weighed on the euro. From the other end, we have Dudley, usually a dove on the Federal Reserve, number 3 at the Federal Reserve, the president of the New York Fed, and he was a bit more hawkish, and Yellen was a bit more optimistic. Again, she's a bit more dovish, but still a bit more, well, the Federal Reserve sees the glass half full. All right, and in general, risk-off environment helps first and foremost the Japanese yen, the biggest winner of the past week, but it also, on a secondary level, helps the US dollar. So these are the 3 reasons here for the slide of euro dollar. Now we know why euro dollar is now back up, and that's because of Trump. That's the dollar side of things. Trump that wants lower rates and a lower dollar. Okay, but the biggest event that is coming up is the French elections. It's on April 23rd, the first round. It's it's neck to neck at the top between Le Pen and Macron. And then we have Fillon, the center-right candidate, about 18-20. And we have Mélenchon emerging. He's a radical left candidate, and he's gaining ground, especially against Hamon of the Socialist Party. But he could also sneak into the second round, and this is beginning to scare the euro, okay? So that's the big unknown. So if I can talk a lot about the technical charts, but the biggest event is in less than 10 days, sorry, exactly in 10 days, on the April 23rd, on Sunday, the first round of the French presidential elections. So let's begin with the baseline scenario, which will help the euro if this happens. Baseline scenario is that Le Pen here, extreme right candidate, Marine Le Pen, she faces Emmanuel Macron, former socialist and centrist, at the second round. Now, they're neck to neck in the first round. It matters who comes first for momentum, but basically all the polls are very consistent, showing that if these two reach the second round, Macron will beat Le Pen by about 25%, 62 to 37 or something like that. Okay, so that's not within the margin of error like Brexit. It's not close like with Trump. It's an easy win for an insurmountable gap for Le Pen. Okay, markets of course want Macron because he's centrist, pro-market and pro-European. Le Pen is extreme. She wants a referendum on Brexit, anti-immigration. So in this scenario, there's a clear choice, and also the probability that Macron will win is very, very high, if indeed he reaches the second round. And here is one nightmare scenario, okay? And there are more. The nightmare scenario is that François Fillon, despite all the scandals, despite Penelope Gate scandal, well, we all know that now that he paid his wife and his sons parliamentary salaries, and then pocketed the difference, taxpayer money. He lost a lot of ground, but he still has a loyal base. The party has a loyal base. It's the party of Charles de Gaulle, okay? And if he manages to push into the second round, Macron loses ground, then some voters at the second round between Le Pen and Fillon, between the radical right and more moderate right, might think that they're both the same, and there the gap is not as big. Still big, still something like 58 to 42, something like 15%, 16%, but it's not as insurmountable as Macron's. And Le Pen could win. That could send euro-dollar beyond parity. Another scenario, I don't have it here as a slide, but is the emergence of Jean-Luc Mélenchon, radical left, always a candidate. I think he's a former communist, radical left, and he is also a bit anti-European, not like Le Pen. I think Le Pen is worse, but he's also anti-market, okay? And he had an excellent performance in the debate, in the second debate, and he gained ground first and foremost against Benoît Hamon, which is a socialist but leans left. So they're relatively close in ideology, but Mélenchon had a much better appearance. And he could also gain votes from Macron, or I don't know who, but anyway, he could also sneak into the second round. And this is the worst nightmare scenario. That means we already have a big downfall in euro-dollar immediately after the first round of the elections. We don't have to wait until the second round. Because if we have Le Pen, extreme right that wants to leave the euro, against Mélenchon, extreme left, which is also, I think he's better than Le Pen, but it's also not he's not pro-market, then the euro could fall immediately. And both of these candidates, but it's also true for Macron, could have a problem having support for their parliamentary support for their candidate. So it could be a big, big mess. And looking at the polls, and they're not that far away. I mean, if you look at Macron and Le Pen they're about 25, and Fillon about 20, Mélenchon about 18, and lots of people are undecided. Any of these four could make it to the second round. Of course, Macron and Le Pen have higher chances, but this is within the margin of error, or within changes that could occur until election day. So that's keeping the euro a bit pressured If you watch financial TV or read financial press, you'll see that Jean-Luc Mélenchon has never had so many people talking about him. Okay, but let's leave the nightmare scenario. Well, tensions are rising. This is again the insurmountable difference. It has been, well, even here in this poll, 30%. I think it's closer to 25%, but basically, any change can make a difference. We'll have another special preview for the French elections in the show next week. Next week the show will be as usual at on Wednesday at 7 GMT. Anyway, any change in the polls that are relatively stable can make a difference. One more thing I'll mention, I watched the daily poll at 10 GMT by Opinionway, but there are also other polls, okay? Okay, let's continue. In Euro, well, we talked about that. The ECB clarified it is not really hawkish, it just is not worried about the extreme scenario. This is Mario Draghi, and he went dovish. And the hawks, once Mario Draghi opened his mouth, the hawks are a bit less relevant. Let's move to the United States. What else moves Euro-dollar? Dudley. Again, not dovish, we mentioned him. And more talk about balance sheet reduction, which is positive for the US dollar. A June hike is certainly on the cards. Initially, after the non-farm payrolls, the odds of a rate hike fell a bit, but they're still above 50%, 60% last time I looked. There's still a lot of time until June. There's another rate decision in May, but it isn't as important. The dovish hike, the impact of the dovish hike that helped weighed on the US dollar moved away. In the meantime, we have Trump to weigh on the US dollar, but on the monetary front, it's a bit more hawkish at the moment. So, well, let's talk a bit about US politics. We talked about what he said about wanting a weaker dollar and lower interest rate. He scored 2 political victories after quite a losing streak. One is Gorsuch, man pictured here on the bottom, entered the Supreme Court, and the Republicans managed to please their own party. At least, and he's considered a good judge. So of course, many people don't like him, but it's not a controversial pick. Let's put it this way, not an extremely controversial pick. And what happened in Syria, it's also positive for Trump. He goes tough against Vladimir Putin. He shows he's a leader. He does a different move than Obama. We'll see how that thing goes on forward, but at least for now, Trump seems to be more in control. But remember, again, more in control means he can also down the dollar. There's a bit more talk about infrastructure, but that, well, in the meantime, faded away with all the geopolitical stuff. Russian investigation is still on, went back to the back burner at the moment, but it could hurt his presidency. Healthcare reform refuses to die, but nothing real is in sight now. Congress is in Easter break. In taxes, what markets want, tax code reform still looks far. So it's a bit mixed. He's not at his worst moment, Trump, anymore, but still suffers a terrible approval rate. Okay, I talked about all the factors that move euro dollar. But what's the bottom line? What's the bias? Well, the bias temporarily tilted towards the dollar on monetary realignments. Again, the Fed is a bit more hawkish, the ECB is a bit more dovish. And then we had Trump, and I think that after Easter, even now, Trump took the dollar down, but now really the French elections are left, right, and center. The most important thing that makes the big difference for the euro. And let's conclude this special coverage with looking at euro-dollar chart. Again, talked about this triple bottom. I won't repeat that. Lines of resistance 107.25, 107.75, 108.30. Support 105.60, 105.20, 104.90. After next Sunday, after April 23rd, I think, and I hope we'll see bigger moves on euro-dollar, depending, of course, on the outcome. Right. Now let's preview the week of April 17th to April 21st, post-Easter. So on Monday, it's holiday in many places, but not a quiet day as Friday is. And we do have some interesting things. We have Chinese GDP and industrial output. China, the world's second largest economy. When China is in trouble, all the world is in trouble. And when China currently is rebounding, everybody enjoys that. So we have those figures early on Monday on low volume. We also have the New York Manufacturing Index in the United States. And then Tuesday is the day the volatility is coming back. Housing data in the United States, also industrial output, and for those trading the kiwi, we have the biweekly milk auction. On Wednesday, we have the final inflation figures for the Eurozone, oil inventories as usual, and those trading the kiwi. Another key event for the kiwi, CPI. On Thursday, the Philly Fed Manufacturing Index, another early indicator of manufacturing and jobless claims. And on Friday, it's a busier day because we have purchasing managers indices from the Eurozone, retail sales in the UK. Brits are buying more essentials and less non-essentials. Again, the standard of living is falling there. Canadian inflation data and retail sales in the midday, and then existing home sales to close the week. And of course, tension next week will rise and rise and rise towards the French presidential elections. Okay. And before we begin to wrap up the show, just want to take a look at figures that were released just now. Let me get that. Sorry for the short delay. Okay, so US jobless claims came out at 234,000, better than expected. This is looking good. But PPI, producer price index, is a bit disappointing. A drop of 0.1 instead of 0 expected on the headline, and year over year, 2.3, and core PPI down to 1.6 instead of 1.8. So I would say mostly disappointing on the PPI. But if we look at the charts, let's see what they tell us. Let's move to I would say not a big move on euro dollar as a reaction to the data. Well, dollar is slightly stronger, but nothing really big. Okay. So this is the wrap up for the market open, US market open for change on Thursday, April 13th. The biggest mover in markets is the US President Donald Trump, which said that he wants a lower dollar and lower interest rates. And we're seeing the dollar recovering just a bit, but that was certainly a high volatility move against the US dollar. Lots of geopolitical stuff, the Syrian strike, tensions with North Korea, tensions between the United States and Russia are all in the news. The Fed moves a bit more to the hawkish side with the minutes and Dudley and Yellen's speeches, and the ECB goes a bit more dovish with Draghi. The dollar emerges as the winner of the mixed NFP, but in the meantime, Trump trumped the dollar. And remember, it's thinner trading ahead of Easter, because it's holiday in most of the world, at least tomorrow, and also thinner trading on Monday. So again, a reminder of what Trump said: the dollar is too strong. He wants lower interest rates, and he's unsure about Yellen. He was very certain during the campaign that he wants her out. Now he doesn't really know. Things to watch out for. We had today most of the data, but the bigger event comes at 2 GMT, the US consumer sentiment. Last big release before the long weekend. And tomorrow, while most of the world is on holiday, we have inflation and retail sales to move markets. Okay, let's take a quick look at the charts for during this wrap up. So euro dollar here, bounced from the lows within this, enjoying these higher lows. currently falling just a bit. Resistance 107.25, 107.75, 108.30, 109.05. To the downside, we have 105.60, 105.20, and 104.90. Pound dollar very much in range, a bit higher now. 125.60, 126.15, and 127. To the downside, 124.15, 123.50, and 122.50. Dollar yen, quite a mover. Found support there at 108.65. Resistance one, of course, the 110 level, followed by 111.60. Dollar CAD falling below support there at 132.65. Support 131.80 and 130.80. Resistance 133.80. Dollar Aussie dollar got close to resistance at 76.10, but retreated. Further resistance 77, support 75.40 and 75. And the Kiwi dollar just hugging the 70 level it loves so much. Support 69.50, resistance 70.40. Okay, so here we are. Thank you very much. I guess that's it for today. Lots of geopolitical news. Syria, North Korea, you name it. Lots of just political news. French elections and Trump's words against the US dollar. Watch out also for oil. I hope everybody enjoys a long and great weekend. For those that are trading, again, retail sales and inflation figures could cause wreak havoc on markets. Yeah, and thank you, Ramon, for the kind words. And yeah, so I wish everybody a safe and successful day and long weekend. I'll be here next week at the usual hour. That's Wednesday, 7 GMT. I don't know if we have the special coverages for the French elections, but I will certainly make a long preview next week for the French elections for the first round, which is certainly important. Okay, so that's it for today. Thanks for those who came at the unusual hour, and see you next week. Thank you, and bye-bye.